Yeah, thank you for having me on the show. Before I get into the GST benefits, just taking a step back, consumption growth in India has been broadly underwhelming in the recent years for a variety of reasons. And, even prior to the GST announcement, since the beginning of this year, we have seen multiple policy measures, trying to revive consumption, be it, moderating food inflation, be it income tax cuts, various state government stimulus coming through. And now, of course, GST is going to be a significant enabler as this is going to drive end consumer prices for key products to come down. If you look at starting today, most of the companies are landing low price products into the market. There are very visible advertisements across the board, conveying to the consumers how the products are getting cheaper. We are cautiously optimistic about demand revival for the broader consumer space. We think you are going to see the benefits of lower prices to flow in gradually in the consumer homes as the current pantry of products expires. Of course, the impact is going to vary differently across different product categories. Clearly, there are certain product categories, particularly in the food segment, where price cuts have been more substantial and which are going to see the benefit of better price demand elasticity. Two, we think this is going to induce or could induce a fairly good amount of premiumization over time as premium SKUs become more affordable. Thirdly, for branded goods, it does improve their competitive positioning or pricing versus the unbranded players. And lastly, particularly for the price point packs, we would expect volume grammage increases to boost consumption. So there are going to be these varied impacts which will flow through. To your question on discretionary versus staples, we think large ticket discretionary probably will see the benefit sooner, particularly with the festive boost that we are going to see. So in durable categories, for example, air conditioners, large screen televisions, clearly could benefit, sooner. Then we have low ticket discretionary apparel, footwear, certain household goods, which should also see the benefits coming through. And within staples, we think packaged food categories, particularly where, portfolios are more aligned to price point packs and also where companies where a larger chunk of their portfolio benefits from lower prices stand to gain.
Right. Latika, good afternoon. This is Vinny joining in the conversation. Just a short while ago, we had Mohit Malhotra of Dabur as well, who said that around a 500 to 600 basis point demand boost is what they are expecting to see, right? Is that something that one could watch out for from the staple side of the category? And what is the volume recovery now one could actually see, or the expectation that you all are penciling in for the second half of the year?
Sure. See, the impact in terms of percentages would really depend on the extent, would vary differently across companies, because there are a certain set of categories which have seen these GST rate reductions and hence, price cuts. And of course, the broader consumption also gets a boost. So these percentage points will depend on the percentage of portfolio which gets affected by lower price points. And also the salience of price point packs would vary as per companies. So for some companies, this quantum could be much lower. For some companies, particularly in the food categories, this quantum could be significantly higher. What we think is that the volume growth for the broader FMCG sector should see a gradual boost. So we are hoping for volume growth numbers to improve towards mid to high single digit as we progress towards the second half of this fiscal year. Clearly, the December quarter would be the first quarter to keep an eye on what kind of boost comes through. We would also think that initially companies have passed on all the benefits to the consumer, and even prior to the GST cut, there was a willingness among consumer companies to push towards volume growth, right? If you look at the narratives of companies so far, till the June quarter, rural has already started to trend better. It's urban consumption, which is still a somewhat weak. I think clear signs of revival are still awaited. So the next few months are going to give us the right trajectory of how substantial the recovery in volume growth would be, but we would definitely expect a gradual improvement towards mid to high single digit volume growth varying across the companies.
Okay, all right, Latika, we're going to leave it on that note. Mid to high single-digit volume growth is what you are expecting in terms of recovery going forward. Thanks very much for joining in and speaking with us and giving us your perspective in the consumption space. Short conversation there, but some important numbers coming through from JPM. We'll take a short break. We'll get you more in the markets. Lots of stocks in focus. We'll be back.